We continue with our part 2 of that income tax filing. I was explaining why justification is necessary. The justification are normally a tax collection center where our income tax gets deposited. So each area has specific justification where the tax needs to be deposited. That's why it is very important to mention the justification. Then we will go ahead in the form. After the justification, then there is this column called as return filed under section. Now this column is also important. You have to select 11 if you are filling the form before due date, that is before 31st July. After this, if you have got some penalty, then clause number 12 needs to be selected, and then as per if someone receives notice, do you want to revise it, at that time you have to select other options. But for the normal taxpayers, 11 option is correct, that is we are filing the tax before the due date. Now then the next is Portuguese Civil Code. We are not eligible for that, so no. Whether this form is original or no, yes, it's an original form. Original means first time you are filling the form. If you are filing a revised return form, in case of there is any error, at that time you need to select this revised option. Now we are first time filling the form, that's why it's an original. If we had filled this as a revised, then the previous acknowledgement number needs to be entered here and the date of filing. But now since it's original, we can leave this as a blank. See, there are color codes here. Wherever there is green, you need to fill that, and wherever it is mentioned in red, you have to red means that it is compulsory to fill the information, and black means it's an optional. As you can see, if we are revised, then only we are eligible to fill this. That's why it's not a compulsion. Here it's an original, so it's an compulsional. Then we will come to next red column, that is residential status. Mine is we are resident Indians. In case of NRIs, they can fill non-resident Indians. We are resident Indians. So then we will go to next. Now in case if anybody receives these notices from the income tax, they need to mention here. Okay, we are not eligible for that right now, so we will not enter there. Now income from salary. Now the income from salary or pension. So what needs to be filled here? Gross net income, salary income that you receive, that needs to be filled here. Or in case of pension from employer, that also needs to be mentioned here. Means first head is salary, or in case of retired pension, any pension that is from EPF, if you receive the money from the employer, you need to mention it as a salary head. The second option is income from house property. Now why this column is given instead of mentioning here that it is a single property? This question might arise to you. So here you need to write, actually the thing is self-occupied. In case you are owning the house and you are staying in it, at that time, in case if you have home loans going on, at that time you need to enter this value here, the total home loan that you have paid in that respective financial year. That value needs to be entered in negative. Like suppose say you have paid 80,000 rupees, so that will come here, and automatically this blue indicates that it's a system generated figure. Whatever value you enter here, it will automatically calculate, and the program will give this value here. Suppose I put some arbitrary figure like 5 lakh rupees, 5,70,000 rupees I put here as a salary. Then automatically 80,000 rupees will be deducted from it because it's an exempted. Now the maximum limit that you can claim under this deduction of home loan interest is 1.5. in case if it's an 1.5 lakh, in case if it's an self-occupied, and in case if it is let out on rent, at that time you can claim any amount. There is no capping on it. Claim any amount of interest that you are paying. income from other sources. I need to correct here. while stating in my first video I told you that income from other sources includes bank FD, savings account, and then I had told you about this 50,000 rupees. I was just mentioning you, and the lottery amount also I was also mentioning you. The lottery amount and the money that we get from TV shows and anything, that needs to be filled in ITR 2 and not ITR 1. So I stand here corrected. And regarding the second part of 50,000 rupees that I was telling you, I think that both got confused here, because my sister was asking me that question. I need to clarify that here. 50,000 rupees is if you receive some money from person, any amount above 50,000 rupees needs to be mentioned, and that needs to be mentioned in income from other source. Now the exemptions here are, if the money that you get the money that you get is from relatives, or in case if somebody is getting married, at that time lot of money gets poured in by the relatives, by any other person. Every money that you get during this marriage ceremonies or during this marriage event, everything is tax free for husband and wife, both can claim. For rest others above 50,000 rupees, everything needs to be mentioned in income from other sources. So there are three heads: bank FDs, savings account, then any amount that above 50,000 rupees, that needs to be mentioned here. Okay. So if I write something say like 30,000 rupees as income from other sources, automatically it will get added in the gross total income. So gross total income means income from all these three sources. Now coming to the deductions. Deductions is 80C. 80C, as we all know, the maximum deductible amount under 80C is 1 lakh rupees. Maximum deductible amount under 80C is 1 lakh rupees. Now I will just, now 80C contains 4 columns: 80C, 80CC, 80CCD, 80CCD. So all these four things, its total should add up to 4 lakh rupees. There is no separate exemption. I will tell you all these four things, what all things are covered in this. In 80C, what you can claim is, if you are paying some life insurance premium, at that time you can claim it in 80C. Then you can claim the tuition fees, like if you are paying for your children, 2 children can be covered under this. So whatever money that you are paying at the time of the admission, everything can be covered in this tuition fees for 2 children. But note, the amount should not exceed 1 lakh rupees. So LIC premium, first one; tuition fees, second one; third one is the amount that you deposit in PPF amount. Everybody should invest some money in PPF. So that is because it comes under triple E, that is exempt. Everything is exempted. Every money is exempted. You can claim that benefit at that time of filing the 80C, and when you retire, at that time you can withdraw the money. Whole money is tax free at that time. So investing in PPF is also a good option, and that comes under 80C. So then next option comes is saying senior citizens saving schemes. That also comes in 80C for pensioners. And there is one scheme called as senior citizen saving schemes, deposit schemes, launched by Government of India in 2004, in which if you deposit that money in senior citizens account, at that time you can claim that benefit. At current rate of senior citizen saving schemes is 9.2%, 9.3 I guess, right? It has been increased right now. It's 9.3% quarterly, and you can claim the benefit of this under this 80C. What the money that you that you get, so that you can claim in 80C. So all these things on ULIPs, many people invest in ULIPs. At that time all these things will be covered in 80C. Now what is 80 triple C? What is 80 triple C? So 80 triple C is same, the life insurance money that you invest. See, the life insurance money that you, this is specially for pension funds. 80 triple C is specially for pension fund. Any amount that you invest in pensions, that needs to be here filled in. 80 CCD, 80 CCD, see 80 CCD, what is 80 CCD is the salary amount that you get from the government or any private employee or any other thing. 12% of it compulsory goes in government funds, that is EPF, that is known as Employee Provident Fund, and the employer has the responsibility to submit that money in government account. So 12% of that amount directly goes there from the amount. The same amount of money which goes from our salary, same amount of money the employer also has to deposit, and the employer gets the benefit, and the employer can claim the benefit here 80 CCD in this section, while we can claim our benefit in this 80 CCD. But again, as I said, all these four options are only liable for 1 lakh rupees. The another option is 80 CCG, that is Rajiv Gandhi Equity Scheme. The Rajiv Gandhi Equity Scheme that is launched last year. That is if you are a new investor who wants to invest in equity funds or in stock market, at that time he can open a new demat account and then fill in the procedure, and he can claim benefit up to 25,000 rupees. 25,000 rupees is like this. They say that 50,000 rupees can be invested, but only 50% money can be claimed for it. Like if you invest 50,000 rupees in shares, then only 25,000 rupees can be claimed under 80 CCG. And if that is for shares, and same is true for the mutual funds which government has introduced in name of Rajiv Gandhi Equity Scheme. You can go in the website and just log in and see which all mutual funds are eligible for that, and you can invest your money there. But in case 25,000 rupees is the maximum amount that you can claim here. The another option is 80D. 80D is medical insurance premium, that the health insurance plans that you have up for 15,000 rupees is maximum that you can claim if the person is below 60 years. If the person is above 60 years, at that time 20,000 rupees is maximum what you can claim. That is, if I suppose I am taking this medical insurance, I can insure my family, and if I include my parents, at that time I can maximum avail 20,000 rupees, because parents, if they are senior citizens, you can avail that. Then another expense is 80DD. 80DD is expense is like the person who is earning. If the person 80DD, the person who is earning, and on him, if there is anybody who is dependent, and he has unfortunately occurred some disability, at that time you can claim maximum 50,000 rupees. But if the disability is severe, and at that time you can claim 1 lakh rupees. That is the person who is spending money for the equipment for recovering the patient who has undergone the disability. He can claim 50,000 rupees to maximum 1 lakh rupees if the disability is maximum. But you need to take care that the person who has undergone a disability needs to go to a government hospital and then take this disability certificate from the corporation, from the government hospitals, and depending upon the percentage of the disability that is mentioned on the medical certificate, you can claim the amount. If the disability is 80% to 90%, surely 1 lakh rupees will be reimbursed, deducted. But if the disability is less, at that time 50,000 rupees is maximum what you can claim. Then 80DDB. 80DDB is the expense that you had occurred while curing life-threatening diseases like Parkinson's, renal failure, cancers, chronic ailments, you just log on to this website of income tax and just find out which all diseases are there. I have just told you renal failure, cancer, Parkinson diseases. All these things are mentioned here, and you can claim a maximum deduction of 40,000 rupees, 40,000 and 60,000 rupees for senior citizens. Then there is another section of ATE. ATE is for education loan. Any student who is for studying purpose, he is taking an education loan, he can claim an exemption here. Same like house property loan, we get an exemption. Same thing for the students also, we get an exemption, total exemption on the education loan, the interest payment that he is making. Then 80G. 80G is political donations that you make to the parties, or if in case there was some drought, like recent drought was there, many people contributed in PM's relief fund, like this Uttarkashi, in that tragedy happened. At that time government had opened some bank account numbers in which we can deposit the money. So that amount that we deposit at that time for any relief operation or anything, that we can claim in 80G. Then comes this option of 80GG. 80GG is house rent deduction. Is house rent deductions. Like if the person is not having his own house, then he is paying some home rent. At that time he can claim this home rent deduction. Then there is 80GGA, that is for scientific research. This is good one. If there is good research going on and if you are donating some money in this research amount, then the money donated under this research amount is, we can claim that. Then all these things are royalty. RRB is royalty. This hardly we ever, nobody gets to apply over this. This is just royalty payment. And then I will just directly come to this section, because we are most of these people, we never contributed these funds. And this is important. This is the savings account which I was telling you about. 10,000 rupees you can claim over here. See, I will just show you one magic, like, okay, on green only you can write, blue is automatic system generated, maximum 10,000 rupees. See, 10,000 rupees, this gross total income 5,20,000 rupees. 10,000 rupees got minus from it automatically. See, gross total income is no, just I told you like this. I am entering maximum 10,000 rupees because my savings account interest is more than 10,000 rupees. So that's why I have fully utilized my 10,000 rupees. Likewise, you can do smart planning when you are investing. At that time, you can keep that much money in savings account, maximum of 10,000 rupees, which can be tax free. Any amount above that, automatically it gets reflected in income from other sources. Then this amount automatically gets filled, and we are done with this. The rest, see, you are seeing this blue, automatically everything gets calculated when we fill next chart. Next is TDS. TDS is, there are two options. See, from salary, from form number 16, the TAN number of the employer we need to fill, name of the employer, what is written, and how much income you have received from him, salary amount, and the TDS amount. Now all this information you will get in form number 16, or you can log into government website and see, you can log into government website and you can click here option view form number 26 AS. You just log in, give password, and it will prompt the amount, and the same amount needs to be filled here, the total income, tax deducted, and everything. Now this is for salaried employees. In case if you are not a salaried employee like pensioner, at that time the money that you get from fixed deposit, this money needs to be filled here. The bank are supposed to cut the TDS from the fixed deposit amount that you receive. Normally what pensioners do is, senior citizens do is, they invest in FDs and they take money in MIC form, that is monthly. Welcome to part 3. I was discussing about form number 16A, TDS deduction in salary. At that time I was mentioning that all the money that you get from FD, senior citizens, they invest this money in FDs and they monthly take out the payments. That is known as monthly income scheme, MIS. And that money that they get, every month 10% money is deducted from the bank as an TDS. So that money gets deposited into the in government funds, and that they file also on behalf of us. We just have to mention it because already bank has cut that TDS money. We just have to mention that in form number 6, under this column, form number 16A, that is income from other salaries. Kindly look here, these two are different. Form number 16 is for salary, where name of employer and the salary income is to be mentioned and the total tax deducted, that is TDS amount total deducted is mentioned here. And this amount, income from other sources, that is from FDs and savings normally they don't cut. Bank are not supposed to cut any amount on savings. It's that we voluntarily we declare our savings account income. Anything about 10,000 rupees is taxable. that I can get added in income under the salary. The TAN number of the banks where you are invested, that TAN number, tax deduction number, that is TAN, name of the deductor, that is bank, Axis, HDFC, ICI, anything. Then these two options are optional. Since I told you these are color codes, red things need to be mentioned. Total TDS that is deposited by them, and the amount total TDS that is deposited by them, that will also be mentioned in the form number 16A, and also it will be mentioned on form number 26 AS. And same amount, total amount you can claim here whatever is given there. Apart from this, if you are paying any advance tax is normally for non-salaried employees, that is if they are getting income from other sources. At that time they need to fill this advance tax, quarterly they have to pay. So whatever advance tax you are paying, that BSR code means bank that gives. On the challan there is this code of BSR code. When you are paying that amount, that BSR codes needs to be mentioned here, the date of the amount and the challan number and the amount. That is for self-assessment. So this thing, now see, normally every year all the income that you get from the other sources, that is FD's amount, we were supposed to pay quarterly tax on that, and equally same thing bank was cutting from the TDS amount. But from this year, Finance Minister Chidambaram, he has included new clause that any person above 60 years, he need not file this advance tax, he is exempted from that. But that does not mean that he does not have to file this last tax. He just have to file one income tax return once in a year. But previously what used to happen is the senior citizens used to fill the tax 4 times in a year, that is quarterly, Q1, Q2, Q3, Q4, but they are exempted to do so from this year. So 58 to 60, this 2 years period, still the person who earns the interest from FDs needs to pay the advance tax. And actually advance tax is already paid by the banks, but you just have to mention here, over here, that this is the BSR code, this is the challan number, and or if you are paying anything self-assessment tax at that time, you can mention over here. Now I come to the last option, that is tax paid at verification. Now all this blue thing will automatically get filled over here, and you just have to enter this red one, that is bank account number. Correctly enter the bank account number. It's very important. Why this is important? In case if you are getting a refund, at that time the money is directly credited to your bank account number. If you want the refund to be credited directly to a bank account, say yes. In case you want the check from the income tax department, say no. But as per the new laws, bank account number, mentioning of the bank account number is must. It's compulsory. Everybody has to mention it. Whether you get a refund or not, or you don't get refund. Mention the valid bank account number. Say yes here. If you want a refund, I mean here it will show on 18th column, it will show whether you are eligible for the refund or not. So if you are eligible for the refund, you click yes. And then mentioning this IFSC code is very important. Last year while I was filling this form, at that time they were asking for MICR number, MICR, MICR number, but this time they have asked IFSC code. So better to fill this IFSC code, because now, as you know, in net banking IFSC code has become a very important has played a very important role. Without having the IFSC code number, you cannot deposit the money in the bank. That's why government has also mentioned this IFSC code. Then type of the account, whether it is savings account or current account or cash credit account. Normally people are using this savings account, means individual. Only bank people, business houses, they use current accounts. We are just eligible for savings account. And then the form is filled. This last option is also important, exempt income, for reporting purpose only. This option is important because if, see here it is mentioned, if your exempt income is greater than 5,000 rupees, you need to fill ITR form 2. Now what all things are included in exempt income? Exempt income under section 10. Exempt income under section 10 is a very broad category. There are many heads under it, but I will just specify the important heads that we use in common daily life. The heads like HRA benefits that you get from the company, LTA that you get from the company. These both things are relevant because everybody gets that. So if you avail the LTA in this year, at that time you can, and if your LTA is greater than 5,000 rupees, then you need to fulfill the form number 2. So this is for salaried employees, and if the salaried employees is also is holding some investment in shares, at that time he might be getting some dividends. If the dividend income is greater than 5,000 rupees, obviously then that is also exempted, because under this law, the dividends that you get from the shares, that is tax free. The dividends that you get from the mutual fund, that is eligible to DDT, that is dividend distribution tax, that is already cut from the bank, that is already cut from the mutual fund industries. And you may get the feeling that the dividends are tax free in case of mutual funds, but that is not the case, because DDT is already cut. But in case of shares, the dividends, entire dividend amount is tax free. Directly you get into the bank account. So you just calculate in 1 year how much dividends you are getting, and then accordingly, if the dividend is greater than 5,000 rupees, or if the total exempt category income is greater than 5,000 rupees, you need to fill the ITR 2. Less than 5,000 rupees, fill this ITR 1. See here, we will look into exempt income in greater detail in ITR form 2. Right now procedure, write this verification, write your name, your son of this one, your means father's name, father's father means grandfather's name, then this place, Pune, PAN number, date, and sign here. Sign here option is for manual entry, we can't sign here. So there is another option of digital signature, in case you want to sign. That we will look later. If this form is prepared by the person other than you, that is tax return preparer, TRP, then that person's identification number needs to be filled here, name of the TRP. these TRP are supposed to be registered with Government of India, and any person who is registered with the Government of India, he receives this identification number. And this identification number is very important, because if in case there is any discrepancy found in your income tax return, at that time these TRP persons are held, and at that time this identification number can help you identify the TRP. So mentioning the TRP is very important. In case if you are not filing, I don't think you will need to go to the TRP after viewing this video. You can very well fill this form, and after this there is this last option of ATG, which I was talking about, political donations. Political donations in ATG deduction. But if you are donating some amount, then mention here in ATG. If you are not donating, then just leave this space as it is. And everything, after doing everything, just click on validate. Just click on ticking validate. Click on ticking validate. Validate. Then TDS also validate. Income also validate. Once you are done with it, okay, it's not happening. Yeah. Okay, just I will just there may be some problem there. I will just show you. This is form number 2, but still it's okay. I just have to show you the validate option. Everything, you just click on validate and it will show this message, sheet is okay. If the sheet is, means if every entry is genuine, then it will show this message of sheet is okay, and just proceed. If there is some error, then it will never show the sheet is okay. So this is first check to you. After everything is okay, then you just generate. You just click on generate. Just a second. Okay. After clicking, after everything, see here also I will just click validate. After filling every sheet, just click on validate and then generate XML. And when you click the generate XML, oh, one blunder. After validating, you need to click calculate tax. After calculating, once you click this calculate tax, automatically see all the entries automatically gets filled here. Same thing here also. Okay, you just click on this on the calculate tax, and automatically this tax will be calculated and it will be filled here. And just you have to click on generate XML, and then there is some problem over there. I don't know. I will have to look there. You just have to just click on this generate XML, and the XML sheet will be generated. I just showed you. I just showed you the XML generated. See, this is how the XML looks like. This is how the XML looks like after generating. You have to click this save XML, and it will get saved. See, this is the XML file that is generated and it is saved. And after this, you have to just upload this. uh, you have to just upload it. It will say this, automatically the PAN number will be selected, and then the name of the ITR form that you have to select, 1 or 2. Now we have to fill this ITR 1, so this ITR assessment here, this one. Browse the file where you have selected this XML. Browse it, select it, and just you're done with it. Once it's browsed, and then once it is browsed, just upload it, and then you're done. If you want to digitally sign, then click yes, and then select this digital signature. Now if you are not having this digital signature, then click on submit, and click on no, and then submit, and then one acknowledgement will come. You have to just take the printout of it and send it to the Bangalore. That is very important, because unless and until that form reaches Bangalore, your tax return is not completed. It will not be valid. Because if you had seen this, if you had seen that form very carefully, at that time last option was sign. At that time that we were not able to sign on the electronic format. For that there is an option of digital signature. Those people who have digital signature, they do not need to send this form to Bangalore. Why we need to send this file to Bangalore in case if we don't have the digital signature, is because we need to verify. They need to verify that we have correctly filled, and then manually we sign that paper on the acknowledgement that we receive, and just put that paper acknowledgement slip in the envelope and just send it there. After they receive, after I think 1 or 2 months, you should get this acknowledgement from them that you have successfully filled this form, and then they will send you this acknowledgement accordingly. In case of digital signature, I will say you.